welcome to the podcast, everybody. Thank you for joining me. Markets are closed. This is going to be kind of brief, but I did want to get one out to you. I promised earlier and on the Twitter line that I would get one out. Twitter.com/Carl Eggers or @Carl Eggers is the handle. And I do apologize for not doing more podcasts, but time gets away. But we do have a little bit of a breakout, and I wanted to talk about that briefly. We're just going to touch on some of the bigger themes going on right now. First, we'll start with the S&P 500. Got a little, got some discussion yesterday about the fact that we were breaking above. Oops, sorry about that. Breaking above this line right up here. I won't even use my arrow. Something's jacked up with my mouse. But we kind of broke out a little bit, kind of paused today. But, there's an old saying on Wall Street that says never short a dull market. And, boy, this market is sure dull, isn't it? This thing has been moving sideways. And really, we've talked about this. We had the sell-off in October right after QE was ended, right? And then we had this V-shaped recovery. And then it's really just been moving sideways since then, kind of drifting higher, but not anything meaningful. And so, volatility started to rise at the beginning of this year. It's kind of settled back down, and now we're drifting higher, and we've actually broken out to new highs. So, we're getting. I do think that the market ultimately may move higher. We are always subject to a correction, as we talked about. We still haven't had anything meaningful in a while. Really, October was probably the last meaningful thing we had. But this definitely looks like it wants to go higher. When you look at interest rates, we've seen interest rates actually moving up this year, especially from February. They were down at 1.6 on a 10-year Treasury, sitting at 2.2, 2.3. That's a pretty big move. If we kind of zoom out and look at it here, has this downtrend really changed? It looks like it may have for the time being. Am I expecting this to go to 3%? Not yet, but perhaps this low has been put in here for right now. And, when we kind of zoom out, even looking at 13 and 15, this 1.6 has held twice now. So I do think rates are probably going to be moving a little higher, but I still think we're in ultimately this range because we do have soft economic data on one hand that keeps rates lower, but there's definitely been some, even the bulls that have been believing in bonds are now saying, well, maybe we could see rates going a little higher. So watch that in anticipation of maybe the Fed doing something. I ultimately think they probably won't do anything even this year, but that's yet to be seen. So interest rates have been moving up, though. We also one other thing that's been happening is the dollar, and we know that the dollar has been moving, had that huge, strong move, but has been moving down recently. So we had this big move up, and really since March, we've had a big drop-off in the dollar, a fall of somewhere about 7% or so, which is a big move for the dollar index. I've had a couple of up days, but has been moving down. So since that's moving down, that's helped oil, that's helped international. Gold's been a little bit, we'll get to gold in just a minute, but it had some good days. But we've definitely seen, when you look at international, this outperformance of international, which we've been talking about on our radio show for quite a while, that we felt like it was going to be coming soon, and you've certainly seen it this year. Emerging markets, developed markets they've all broken out of this downtrend, and they are outperforming quite a bit. In fact, developed markets are up about 12% year to date. Emerging markets are up about 9% year to date. And yet when you look at the Dow Jones and the S&P, they're up 2 or 3%. So we haven't had a lot of movement in the domestic markets, but the international markets we have. We've also seen a move out of utilities, pardon all the lines, but utility stocks here kind of took it on the chin because interest rates have risen. So that's sold off. When you look at things like REITs, they have sold off. So that whole income trade seems to have sold off here recently. Treasury bonds are down about 5% year to date. Here's what TLT looks like. So if you were in that, it's been a great trade the last couple of years, but it kind of peaked up here around late January, and since that time has moved down quite a bit, actually probably about somewhere around 14%. So it's been a pretty big drop-off in Treasury bonds. When you look at oil, this is the USO. So we know we had that big bounce. If you kind of match the two, I'll switch over to the oil chart. We were at that $42 level or so. We bounced up to around 60. Kind of has plateaued a little bit here. USO had a bad day today, down about 4%. So this definitely looks like it could be rolling over temporarily. I actually thought that we might get up to about 65. I thought we'd get probably up to right in here before we pulled back significantly. We'll see if that's the case or not. Remember, this oil chart is a day late, so it doesn't reflect today's closing. That's why I like to show you the USO, which, of course, you can see that big drop today. So on heavier volume, so that's something to watch out for. Is again, the dollar was strong today, so when you combine that, that's why oil was weaker. So all these things are tied together. Now, in terms of kind of what's working right now, I would point to some of the things like, for example, this is a semiconductor ETF, and you can see semiconductors are starting to, they had a nice move up in late 14, early 15, kind of moved sideways. They could be breaking up to the upside. There's a lot of stocks. We own a couple of them in the semiconductor space that are moving up nicely. We took profits on FireEye, which is we have in our aggressive strategy. This is a cybersecurity stock. Had a nice, huge run up here in February, kind of moved sideways, came out the earnings, popped a little back, and we sold it in two pieces, so we're out of that, rotated into semiconductor stock. Again, that's in our aggressive strategy. Also, in our income strategy, we like KRE. This is the regional banking ETF, so we kind of see this breaking out. If you were to go back a little further, you'd see that this thing had a nice run and has just been moving sideways really for about a year and a half, kind of going to the bottom end of the range to the top end of the range. So now we are breaking out to the top end of the range. Obviously, this is levered to higher rates. So if rates do dramatically fall, KRE may go down with it. So that's something to keep a hold of. But in our income strategy, we keep this in combination with some things which are hedged, to rates falling. And so again, we kind of get this yin and yang effect. But we like this. We actually bought a REIT today as well because they have been beaten up. In fact, if I show you the REIT index, IYR, we didn't buy the REIT index. But if you look at this, once again, not a big surprise, but down about 9% from high to low. All has to do with rates. If you look at if you assume that this is it for rates and this is the bottom end of the channel, then you would want to go in and buy REITs. But we actually liked a selective REIT, which we think has been beaten up a little bit. So we went in, we've owned it in the past, went in and bought that particular one. So that's that. We also want to show you quickly about gold. You can see that gold, we had talked about a trade we'd put on. We made just a little bit of money on it. It was a very short-term trade, and we got out of it. So now we are out of gold, locked in a small little profit. But gold is just very difficult to trade right now. This longer trend that we're looking at here that I've drawn, this is where we are. And so you can see we're kind of in the middle of it. If we came back down to here and things started to roll back up, maybe we would take another shot at it here. Or you may even say if it got up here and started to roll over, maybe you'd want to short it. But right now, gold's just kind of trendless. And because of that, we just don't want to be a part of it. So we're not in it right now. And, of course, you get days where the dollar's strong, the days the dollar's weak, deflation, inflation, the Fed's going to raise rates, they're not going to raise rates. It's just meandering. So at some point, gold will work again, but it doesn't seem to be working right now. In fact, you can see here the gain it had last couple days gave all that back today, down about 1.4% today. So it's right back where it was, here. It's just meandering. There was a little spike here, but after that, it sold off dramatically. So nothing really doing there. We have seen a little bit of outperformance from the Russell 2000 the last few days, so we like that as well. But again, and it's kind of established this new, you can see it was in this channel, kind of broke below, it's kind of fake down, breakdown here below in October, and then it reversed and actually broke up to the upside. So it's been one of the stronger things, and since October of last year has been outperforming quite a bit, has been outperforming the S&P 500. So we like the fact that it's, was in this trend and now it's broken up. You can see these moving averages were moving sideways. Now they moved up. And again, wouldn't mind to see it just consolidate a while. But generally speaking, again, getting back to the overall market, the S&P does look like it wants to go a little higher, but certainly the game isn't necessarily just in the S&P, and this is the first year we've seen some other things working, like international. Shorting bonds has worked. Owning oil has worked. And really a lot of that has to do with the dollar. So we're watching that carefully. But if you don't have enough international, again, pay attention to that because that is starting to work compared to the domestic markets. That's really about it. Again, make sure you tune in every weekend for our radio show, and we'll try to do a few more podcasts. I've just been busy lately. So we will talk to you guys soon, and have a great evening. Don't forget, EggersCapital.com.